Hello and welcome to the Workplace Benefits channel. In this video we're going to talk about group supplemental term insurance, or sometimes called group voluntary term insurance. My name is Michael. I'm president of GLG America, where I try and do the best I can to make sure that if the worst happened and an employee or one of their family members died today, that you've done everything you can to help them prepare for it. So on to today's topic, which is group supplemental term insurance, sometimes called voluntary term insurance. Now, in the last video, I talked about basic group term life insurance, and so I'll put a link to that video in one of the corners here so you can have a look at that. Now, before we begin, just keep in mind that every insurance carrier, every company, every state is different on how these things work. So while I'll give you kind of an overview of how they work in general, everybody's works probably slightly different. In fact, most employees, just like the basic group life insurance, they know they have something sometimes, but they don't know what they have. And the employers often don't know how it works. And then, surprisingly, the insurance agents that enroll them many times don't know all the rules either. And so it's kind of a shame that they're the ones that even offer the program, and behind the scenes, they don't even know all the rules themselves. So it's pretty crazy that such a simple program that pays a death benefit when somebody dies, and it's just a group plan, that it can be so complicated to administer and just keep the rules straight. In fact, a lot of employer groups, just administratively on the billing side, it's sometimes a nightmare just to keep these bills straight on the group term insurance, because it's self-administered a lot of times, and the rates go up every 5 years. And so a lot of employers, some that I've talked to, they don't really like the group term insurance that's offered above and beyond the basic. Typically what happens is employees pick up coverage, and if something happens and they die while they have it, then it's going to pay a death benefit. And they can cover their families too, their spouses and their kids, but usually they have to buy on themselves to buy on families, so there's usually a participation requirement in order to do that. Now, these rates, like I said, might have said a minute ago, go up every 5 years in most cases, although I have done issue age cases where the voluntary term is the same, no matter how old that employee gets, and why that isn't a customary offering, I don't know. But that's a really cool way to do it. But most of them go up every 5 years, and because they do, I always tell employees that if you're healthy, it makes more sense probably for you to go in and lock in your own term insurance for 20 or 30 years, because you'll probably save money. But the bottom line is that most employees never see a life insurance agent, and because they don't, they just never get around to doing that. It's just easier to opt into the group life insurance plan, and I always encourage people to do that anyway. Now, the employee does not own the coverage. It's a group contract, so that means that the group controls it. And because they do, they can always eliminate the program, which I've had groups do. They could also change carriers, and that could change the rules slightly. So just because you have a group term insurance plan today doesn't mean it's going to stay that way year after year after year. What happens too is that employees often get priced out of the group term insurance. As they get older, sometimes the rates get to be more than what they want to pay, and since that happens, they sometimes will drop their group term insurance, which is the whole idea, because the insurance company really doesn't want to pay the benefit anyway. In fact, when they reach 65, 70 years old, sometimes that benefit does decrease, and when they leave employment, then it can end then too, and most commonly does. However, a lot of group term insurance has a feature in it called portability. And I like portability because it allows the employee to continue their coverage just like they were still a member of the group. Although the rates might change slightly, it would work exactly, as it did for the most part while they were an employee. But the problem with portability is that most people confuse portability with this concept of permanent coverage. So, people go, oh, it's portable. You can take it with you. Yeah, but that doesn't mean it doesn't end someday. And so the reality is that most people outlive that coverage, because the insurance companies, like I said, they're not stupid, and they really want to just basically provide the benefit without paying if they can. And so they terminate it They know how long people live, and so they design the programs to last just long enough, and then terminate, and then the employee usually dies after. Now, that doesn't mean it wouldn't be a good program if you died while you had it. I don't mean that at all, but I'm just saying that realistically, most people never collect any money out of it because they live so long that they outlive it. Now, I talked about portability a minute ago. A lot of times these programs also have a conversion option upon termination of employment, which means they could change the policy to a policy that they could keep their whole life. But most people don't do that because they're older when they get an opportunity to do that. And many times the only people that look into it are people that have some sort of health problem already and they can't get life insurance on their own. And because insurance companies know that only people that are going to try and convert that are people who can't get insurance on their own, they also price it that way and make it much higher in price. So that's kind of a summary of the group term insurance that people can pick up on their own above and beyond the basic group life. So typically you'll see the basic group term life and layered on top of it some sort of group supplemental term plan. And so basically that's how that works. If you got any questions, please let me know in the comments. And if you're not subscribed to the channel, I encourage you to do that so you can keep up to date on the other videos. So again, my name's Michael, and I'm doing the best I can to make sure that if the worst happens to one of your employees or one of their family members and they die today, that you've done everything you can to help them prepare for it.